And wonderful good morning, ladies and gentlemen, and welcome back to our morning briefing show. It's Wednesday. No, Thursday. Jesus, it's Thursday, January the 6th. We have here in my country, we have a day off today, but I'm here, I'm awake for you to work with you in this morning briefing show. Thanks to Admirals that we can do this every morning. And thanks to Anna, my mother in the back. My name is Markus, and I'm really happy to share my knowledge and to share my ideas with you. We share this, we stream this show on YouTube at the same time. You will find a button in the right corner. You can click on this button so you can subscribe this channel. You will never miss an episode of this morning briefing show or my partners Jens and Paul, or maybe all the other webinars from Admirals. You can give us a like if you want. You can leave a comment, whatever there is. Get in touch with me. Vladimir, wonderful good morning here on YouTube, and also here to everybody. So don't hesitate to share your ideas with me, to ask whatever is in your mind. Feel free. This is your show, and we can talk about almost everything here in this show. Okay. So I share my screen with you. So here we go. Great. So let me fix the technique here, then I can see your questions. Great. So now let's go to our upcoming events today. There is this afternoon, we have, or this morning, we have services PMI from Britain, Great Britain at 9:30 German time. Then the merchandise trade in 1:30 this afternoon from Canada. Then the trading goods in USA, 1:30 also. And the weekly export sales, 1:30 USA. And of course at 3, the business service PMI. And the gas storage report. So about maybe if you trade in natural gas, then you should be carefully with this news this afternoon. So all the other news you will find here on this this homepage, admiralmarkets.com/analytics. Top news, something like this, or about the topics of NASDAQ, S&P 500. So you see Admirals makes a lot of effort to give you wonderful and valuable content. So don't miss this site and visit it all the time. You need any information about whatever there is in your mind. Okay, you can follow our lovely webinars. The next one is tomorrow at 2 with the trading key reversals. So join this webinar from one of my lovely continuous partners. Make sure that you don't miss any kind of information if you join the Telegram channel from Admirals. So feel free, you will find the link in the chat, I guess. Or maybe you open your Telegram channel on your phone or your computer, and then you can type in Admirals, and then you can follow. And they're lovely content. They're really, really lovely content. Also, by the way, on Twitter, you can follow Admirals there. It's really, really helpful. And if you want, that's not so important. If you want, you can follow me with on Daytrader 7.0. Okay, first of all, let's start with the really, really good news. And you know, since December, beginning of December, I started to be focused on my trades and, you know, to work with my own path of logic. So what happens with the accounts? Look at this one. I can show you. That's the result. You see, we had a great start of December up to yesterday. Yeah, we have a lovely profit factor 170, and we have this curve, and this is really great. And I promise you, I will work with all my heart and my hard blood to bring it back, this account. And this is why I'm focused on trading this year too. And you see what happens if you work with logic. If you understand the real logic in trading, there is no other way to make money in the markets. So, and if you make money in the markets, you can change everything. You can support your family. You can grow up your accounts. Yeah, you can help other people by sharing your knowledge, whatever there is. But let's do it together. And I love to be the example for you. So let's go to our trades. And we start with our DAX 10 minutes. So yesterday we had first time since a couple of very profitable trades with the first trade with a loss, 115 points. But you see the first one, the last one was 160 points profit. So nothing happened, but sometimes it is. And I'm happy that this happened yesterday. Why? I was a little bit scared about so many profitable trades in a row. So, you know, we work with probabilities. There has to come a next loss. It's just a question of time. So therefore, I'm really happy that we have this loss yesterday, because then with every loss, we come closer to the next profitable winner. So on the right side of the chart right now, we have a new uptrend because the downtrend is broken already. And oh, by the way, we came almost back to the point of control. You see, that's really cool. So now we have a new uptrend and we are in the second move, which means we have to be carefully about the next correction, because the next correction offers us the next entry in the second trend arm. So please don't miss it. Yeah, because we have to follow the rules. My bad was that the second trend arm here was also profitable in the downtrend, but unfortunately, look at the time, it was in the middle of the night. I used to sleep nights, so it's that's the fate, I would say, of a day trader, that sometimes you miss the signal if it happens in the middle of the night. But if it happens just 1 or 2 times a month or something like this, it's not really the problem, but it must happen as less as possible. But sometimes it is, unfortunately. So, but now we're on the right side, we are waiting for the next entry. And here comes a quick and a lovely question on YouTube. I have, what's the best time frame for a swing trader? This is one of the deep content I explain in my course, that there does not exist a time at all or a time frame at all. Why is it? Just a quick hand. In the order book, where everything starts in trading, there is no time. So who creates the time frame? Where does time frame come from? From the exchange? From trading? No. Logic? It's from you. Because you say to the order book, or respectively to your software, please show me what happens in 1 hour or 4-hourly chart. So why we should use time frames? Of course, to find our signal. That's the only reason why we use time frames at all. So which time frame you should use? Not the time frame you want. You have to choose the time frame you can handle your signals, and you can trade, you can plan and handle and manage your trade. First of all, you have to choose the time frame. You will never miss a signal. It doesn't matter if you're a day trader or a swing trader. There is no best time frame. There is a time frame which has to fit to you, where you can catch your signal. And if you miss too many signals based on your strategy, which strategy you ever use, it's up to you, then this is the time frame. But there is no best time frame for swing traders or day traders or something like this. This is why I always try to explain, please, in heaven's sake, if you want to become successful in the long run, you have to step on the path of logic. This is so important. Okay, let's go to our focus charts. And in focus we start with Bitcoin, of course, in 4-hourly chart. Finally, Bitcoin is going down, finally. So now there is our chance. This is Bitcoin 4-hourly chart, exactly. Which means now we have a lovely trend. And the trend is here on the right side. Exactly. So first correction, and now we have a trend. So now we are waiting for the next correction, and then we can go short in Bitcoin, for example. It's not yet, it's just on the watch list for me. Then we have Dow Jones. And yeah, Dow Jones offers us a great chance. So the main trend actually is still facing upwards. The trend will break here. But on the right side, and I don't have an open position, there is my short trend. So, and here I'm in the move. I'm waiting for the next correction with a balanced candle, and then I go short, especially point of control is quite far away. This is a possible chance for maybe today. Then we have DAX 40 in 4-hourly chart. And here we have to admit that the uptrend is broken. The uptrend is broken, especially here, which means actually there is no valid trend in 4-hourly chart, which means there is nothing to do. Then we have British Pound USD. It's an old uptrend. Actually, there is nothing to do. Just let it go. And as I used to say, I'm quite sure that we at any time will reach the point of control. Believe me, we will. Unless they will move the point of control to another price. But this is not happened yet. And this is not looks like right now. Of course not. So then the gold price is going a bit down, but the trend is still up. Trend is still facing upwards, and it's still in a correction. And actually, for us in gold, there is nothing to do. So, of course, and then we have Euro USD, and this is, by the way, one of our running trades. So here we opened the trade here with this trend. It's still in the third trend arm. And you know this, we made one profitable trade already. That was last year. So, and now we are still in the third trend arm. We are still waiting for a final trend continuation at this point too. And we have to wait, we have to be patient. And by the way, there is a secondary trend which is facing upwards too. And this is this one. So, and here in this one, both trends in my direction, I open the trade here again. Yeah, and now we are in the correction. I have a soft stop here. When the price is going below this soft stop, I will close it. That because then we have to admit that there is a secondary trend is facing downwards again. So, and this is this one. Look at this one. Here we go. 1 and 2. So it's not happened yet, by the way, but you should have it on your watch list, by the way. So before we come to our running trades, I want to ask you the question, which is really important and related to our special topic you can see on YouTube. So my question for you today is, drum roll, do you know what is carry trading? So we are waiting. You will find it here on Zoom. Exactly. Thanks a lot, Anna. Do you know the meaning of carry trading? So yeah, I do. Oh no, tell me about it. So what do you think? Do you know the meaning of carry trading? So why do you think about this? Let's go to our running trades. And we start with Australian dollar, Canadian dollar. Here we go. We are a little bit in profit because the trend is going down again. So we open the trade here. The long position were closed here with a profit. Here we are now in a downtrend, and now the price is going down. We are a bit in profit. Yeah, let's see what happens. And you know how we manage this trade? If we have a close and the first contrary signal, which means a balance candle, then we make a partial profit. and then we can trail the stop loss. This is Australian dollar, Canadian dollar, by the way. Australian dollar, Swiss franc. Here, actually, we are in loss, and we are struggling here actually with the point of with my soft stop. Yeah, and be careful, because there is happening on the right side a kind of downtrend. So, and this is this one. So, yeah. And you see how important it is. I missed the entry here. It was a hedging position. So actually, yeah, it's not the problem, but we have so many profits with the other trades. But you see how important it is to draw the trend. This should not happen. It's not a problem right now because I have an open position. Hedging is just an option. But you see, in case you don't have an open trend, then that was your entry chance. Yeah, that was your entry chance. So then we have Canadian dollar, Swiss franc. Here we are completely fine for the moment, because let me check it out. Yeah, here we go. We have an open position. And that's the trend. Starting here, 1 and 2. Entry there. Partial profit here. And the soft stop, by the way, is there. You see how important it is to work with a soft stop, mental stop alarm. MetaTrader can use an alarm, by the way. And you see, we didn't lose this trade. So actually, just wait. We are a bit in the correction. No problem. It's a part of the trend. So don't be scared about a correction, guys. A correction is a necessary part of a trend. It's logic. Come on. Without the correction, there is no trend. It's this special term, dependent origination. Yeah, and the trend depends of trend arms. And the trend arm depends of correction, a move and correction. So don't be scared about correction. See, it's a couple of things you have to learn. Then British pound, Australian dollar. Oh, that's lovely. This is why I say, let it go. Let it go. So that's the trend. Move, correction, correction. There was the entry. And finally, partial profit. And you see what can happen if you just let it go. So, and that means, okay, we can trail the soft stop below the last 0.3, set an alarm there if you want. So we can set an alarm there, for example, trading alert. Here we go. Have an alarm there, and the trade is safe. It's safe. You cannot lose money. So just now let it in heaven say go. Let it go. You will never know how many trend arms will follow. You don't know. So just let it go. Okay? There is the big money in. British pound, Swiss franc. Oh, San Miguel, soft stop is just an alarm. Yeah, calculate your money far away on a hard stop, yeah, that you don't get out with the spike at the soft stop at the original 0.3. Yeah. Okay, more of a macro question. Do you think there is a relative strength in the DAX 40 towards US 30 since BOSS is value, but DAX is not as much affected from Fed influence? So in my opinion, never mix time frames, never mix strategies, and never mix the underlyings. Yeah, I know a lot of people tell online there is a correlation between Dow Jones and DAX and the Fed decision. Stop doing this. It's just my private opinion. You can do whatever you want, but think in a logic way. You have only two options to make money in the market. First option, you're big enough and you can influence the price by your own volume. If you miss this kind of guarantee, you have to work with a strategy. And a strategy is based on probability. So, and every index is working by its own, by itself. So don't mix it. Yeah, it's just to bring people into the market. But if you can do this, whatever you think, but then you have to make sure that you can prove it with numbers. Probabilities means you need fixed conditions. You need a mathematical calculation. Otherwise, it's just news. It's just kind of meaning and opinions. So this is British pound Swiss franc. What should I say? We continue the trend. It's really lovely. So, and we started here first, second, there was the entry, first partial profit, trend continuation, small correction, trend continuation, soft stop alarm here. So, which means here we can set the alarm. And now you cannot lose money anymore. It's really cool, right? Just let it go. Oh, by the way, the point of control pulls the price. Our point of control is up there. So just let it go. Yeah, we cannot lose money anymore. So then I have New Zealand dollar, Swiss franc. Yeah, and here we have two trades open at the same time. And this is the uptrend. So that's the no, sorry, here we go. So first correction, second correction, there was the entry in this, and we have here a kind of soft stop. Yeah, and now you see finally we have a clear close below this soft stop, and therefore I trailed this morning my hard stop below that candle which broke the soft stop. So, and now I will the trade will finish there, but also I have a short position open because at the same time I have a downtrend, and this is this one. So therefore I open a short position there, and with the short position I'm in profit for the moment. So I'm waiting here for the next balance candle and then make a partial profit in the short trend. Yeah, let's see which trend is stronger. Let's see. Then we have New Zealand US dollar. Here we have two trades also open. And why is it? You see, here we go. So that was the first one. So at this point, they're starting a new move. Therefore, we open a position here. It's the second trend on, which is the duty to open the trade there. It's based on the rules. But at the same time, we realized, okay, that's my downtrend. So, and therefore, we open the downtrend on the lower side exactly here. Yeah, there was a small correction. I opened the position there. So now we are in profit with the downtrend and it lost with the long trend. So, and now what I have to do, if this candle, the current candle 11 have a close below my, my soft stop is there. My soft stop is there, which actually there is no break. Yeah, that's the soft stop. And if I have a close below that, then I go out. And if I have a balance candle, I can sell half my position of the short trade. You see, it's just following the rules. Doesn't matter. You have to catch the signal in the second trend arm. Yeah, it's always the point. Never miss this signal because you can never know which trend will continue. This is really important. Is there a reason why you choose Heikin-Ashi before candles? Yeah, in Heikin-Ashi, we delete the market noise. Yeah, and I'm a trained trader and I make it as easy as possible. And Heikin-Ashi to read, which is, I explained it yesterday, we have to listen to the chart. We don't have to analyze or to interpret. We have to listen to the chart. And the normal candles are a wide field of interpretation. Heikin-Ashi, trend candle, balance candle, over and out, nothing to interpret. This is All this stuff is you have to learn in trading, by the way. So finally, we have US dollar, Canadian dollar. And we made a partial profit here. And now we're coming bit in, which is a rest position. We cannot lose money because the soft stop is below the last 0.3. So there is the alarm here. And now we have a new uptrend. Be careful with this. This is the new uptrend. Move, correction, move, which means the next correction is ours. Yeah, I'm not sure if this will happen today, but you should have it on the list for today. Okay. So just two interesting proposals for today. First, Swiss franc, Japanese yen. Why is it? You see, we made a lovely trade here. And now on the right side, we have a new downtrend. It's this one, move, correction, move. The next correction is ours. So please put it on your watch list. Then we have Canadian dollar, Japanese yen. It's on my watch list for today. Also the same. It's the correction actually of the main trend. But if we consider that the point of control is much far away, then we have this downtrend. First trend arm, second move. We are waiting for the second correction. And if this will happen with a balance candle, then we go down. And finally, US dollar, Swiss franc. It's maybe a possible uptrend. Finally, possible uptrend. Yeah, it's this one. It's, yeah, we can consider this as a correction. So, and here's the second trend arm. There was a possible entry chance. There was a point of control in the way. So, which means at the point 2, there is a possible chance to open the trade. So let's do it together. US dollar, Swiss franc, finally. Let's open a trade at the point 2. I use this mini terminal of the Supreme version here from Admirals, MetaTrader 5. So I can open a position here, a bit higher for a break. So long, and then stop loss quite on the lower side. And target anywhere. However, we want to ride the trend. So it's not happening right now. Okay, let's do it again. Yeah, here we go. Here we go. So now we can speculate on this break at the point 2. Yeah, let's see what happens next. This is the next chance in US dollar, Swiss franc. Okay, so that's question. Do you consider the multi-time frame analysis? No, I don't. Why is it? It's not logically to consider more than one time frame. Why? As I explained a couple of minutes before, there does not exist a time frame at all. So in every time frame, you have different traders. It's an illusion. It's an illusion to think that it's an advantage to trade in the same direction like the big trend. It's an illusion. It's just a kind of perception. You cannot, and I prove it with some studies in the online course, I prove it with numbers that it's a worse scenario to consider the higher time frame. It's not logic. Okay, but as I said, everything is just my opinion. Yeah. So the question of today is, do you know the meaning of carry trading? So we have 87%. They say, no, not really. So let me explain. Carry trading is a part of Forex trading. So which means we have different we have different rates in different countries. For example, Euro has a rate of less of 0. USD, the dollar has a rate. That's the central banks make the rate decision. We have a rate in US dollar of 0.25. Australian has a rate of maybe, I don't know, 0.75. So Canada and something like this. So every country and every currency has its own rate. So, and this is just for huge traders, because you get rate, you get money if you invest your money in, for example, in dollar. So if you buy dollar and if you invest your money in dollar, you get 0.25 rate every year. It's not an advantage if you have $1,000, of course not. But if you are a big guy in the market, like a central bank or a bank or a huge trader, and you have millions on your account, then it makes a difference if you get a rate of 0.25 or 0.27, 75 or 1%, or if you get nothing. So huge traders do this kind of carry trading. They carry the money from one currency to the other. So if you have euros, you carry your money to New Zealand dollar, for example, and you sell euro and you buy New Zealand dollar. Why is it? New Zealand dollar has a rate of 1.1%, which means you get 1% rate for your money. And that makes a big difference. So how do they do that? Now, there is no one who carries the money in a bag, is flying over to New Zealand with the bag and put the money in there. No, this is happening in the market. You sell euro and you buy New Zealand dollar. But that's just what big guys doing, and this is the meaning of carry trading. You carry your money from one currency to the other. It's just for the big guys in the market, but they do this by trading in the markets. Why you should consider the big money all the time and to work with the trend and never fight against the trend. And this is the real meaning of carry trading, explained in a really simple way. Thanks for listening, guys. I wish you a lovely day. We see each other in our trading room, live trading room, or tomorrow at the same time. Thanks, Anna, for your time. And thanks to Admirals, and have a nice time. Have a lovely day. Thanks for everybody for listening, your attention. And as always, have courage and be kind. And may the force of the rules be with you. See ya tomorrow.